Let's touch quickly on gold, and then if you feel like it, and I know you do because I enjoy reading about what you write. If we could talk a little bit about silver and copper. Obviously, we've seen a hell of a ride to start the calendar year in the gold, silver, and copper markets. And gold has kind of stabilized a little bit. But it is almost 10% or so off its high, but that high was very, very short-lived. Talk us through it briefly for those that maybe haven't been paying attention to gold. For those of you who've put gold in the portfolio, obviously it's done very, very well. Jonathan, you've been talking up gold for a few years now. You're certainly not a gold bug, but you've been encouraging people to invest in gold for at least, I think, 2 or 3 years back when gold was at about just under $2,000 US an ounce. It's now at $5,000, peaked at 5.5. Yeah.
Okay, well, I'll kick off with gold. I don't know how many of the people watching this get my weekly pain report, but it's been quite a journey, Eugene, over the last several years. The fundamental investment case or thesis, which underwrote my very positive view on gold, was that gold was in my view, the ultimate insurance policy, and particularly insurance policy against geopolitical anxiety and developments, and particularly post the Russian invasion of Ukraine on February the 24th, 2022, and the rise of what I've described as the so-called axis of autocracy, Russia, China, Iran, North Korea. And since that time, China, to give you one example, significantly increased its exposure to gold, and other countries such as Poland, which, as you know, sits in a very interesting part of the world. And if you study Polish history, you'll understand why the Poles are very anxious about, the geopolitical temperature that's prevailing in the world today. I mean, there's very few countries in the world that have been invaded by so many people as Poland. So the Polish central bank has been one of the largest, if not the largest, buyer of gold in the last 2 to 3 years. And a number of years back, I wrote extensively to my subscribers, keep an eye on these central banks. The other one was actually Turkey. And so I kept saying, look, central banks around the world are beginning to diversify their foreign exchange reserves, and their safe haven asset of choice is gold. And then that obviously has, built up a tremendous momentum. And that was the kind of starting point. And then institutions started going, hang on a minute. Wow. When we put gold in an overall portfolio, it's got wonderful diversification benefits. So we started seeing all these white papers published by fund managers, some of them not that long ago, saying there's a huge diversification benefit. It doesn't correlate to other assets. It diversifies and spreads your risk in a broadly diversified portfolio. And so you started seeing institutional interest. But what we know today, and I used to say 3 years ago, that institutions around the world have approximately 0.7% of their total assets invested in gold. And I said, just imagine if it goes to 1, and then, wow, what if it goes to 2? And then don't even think about it going to 5%, because the actual amount of money that would represent you wouldn't have enough gold in the world. And so obviously, since that time 3 years ago, it's kind of gone to 0.9 of 1%. It might be now just over 1%. In the meantime, the central banks have been accumulating gold. So the fundamental thesis, I think, is still intact, because we have this new geopolitical reality. And I think the Russian invasion of Ukraine kind of amplified, accelerated that new geopolitical reality. So the fundamental case and argument for gold is there, and institutions are interested in putting gold into client portfolios. Silver, I've got to talk briefly about silver. I really shocked myself. On December the 15th last year, my final weekly pain report for the year, I decided to be courageous and create and build a so-called model portfolio. Now, my readership ranges from, institutions, hedge funds, high net worth, blah, 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 blah. And how do you build a model portfolio for everyone? It's really tough. But a couple of high net worth people said, listen, come on, JP, put your money where your mouth is. What's your perfect model portfolio? So I built one in December. And I surprised myself. I put in silver because, Eugene, I'm terrified of silver because, some of my readers are very aggressive high net worth traders. And if I put silver in there, they'll go out and buy silver, and the thing will either go up 30% or fall 30%. So I don't like putting silver into a broad portfolio, but I did. And then, of course, silver misbehaved itself. From December the 15th last year to January the 29th of this year, silver rose 92%. 92% in 6 weeks.
Hmm.
So I immediately punished it and removed it from the portfolio. And I put that out to my subscribers. I said, get out of silver. It's gone mad. It's gone up too much, too fast, 92, whatever. And so silver's no longer there. Now, silver crosses over from a kind of precious to an industrial metal. Silver's used, obviously, in solar and also in electronics. There's basically a shortage of silver relative to demand over the next 2 to 3 years, running into a big silver deficit, supply-demand deficit. So the fundamentals are pretty robust. But, this thing was trading $25, $30, 18 months ago. And it went to 100 and whatever it did, $112 an ounce. So anyway, I took it out of the model portfolio. So all bets are off on silver. And I don't think I'll go back to recommending silver. Copper, the supply-demand picture for copper is unambiguously positive, Eugene. One of my big themes of the last couple of years is the electrification of everything. And electrification and the ability of economies to generate ample and plentiful and cheap electricity will be the primary determinant of their economic success. Now, if you continue with that theme and then you bring in data centers and the amount of copper that's going into these massive, giant Goliath data centers, and we also know that China would buy every ounce of copper available in the world if they were able to or allowed to. And I think governments, countries, and companies are going to be stockpiling copper because we're running into a major deficit. The demand for copper looking forward exceeds supply. And usually it takes a long time to bring a copper mine online.
Yeah, right.
Yes, there's quite a lot of copper around, but I tell you what, to try and ramp up production to meet the potential demand for copper in the next couple of years, you'd really seriously have to ramp production. It's just not going to happen. So copper prices will continue to go up. And if my thesis about electrification is right, and I think it is, then there's going to be insatiable demand for copper. And the other reality check is that China has an electrical capacity, or the amount of electricity that China generates is many multiples of the United States of America. And in the last, from 2010 to 2024, the increase in the electrical capacity of China, the amount of electricity they can generate, was more than the rest of the world combined. And so China knows to win the economic race, they've got to generate a lot of electricity and generate it at an affordable price. I wish someone in Canberra actually understood that. Germany, tragically, has electricity prices that are about 5 times Chinese electricity prices. And as a result, major German manufacturing companies are shutting up shop and leaving Germany.
Yeah, right.
So that's the new energy reality.
Fair enough. So silver's, they're all very volatile, can be very volatile.
Yes.
Basically, silver's had an incredibly volatile period, and you're not touching that anymore. You've explained, I think, the supply and demand situation with copper well, so that's an interesting one. And of course, gold. Well, that's been a much longer term story. So very interesting. But I guess I would caution everybody just to be careful because they are very volatile commodities.